Also, we'll see its Islamic banking, its principles, what are the systems and technologies, and how Islamic products evolved during the from the earlier phase to the modern banking. Okay, let's start. Before we move on, we will see the background about the Islamic banking. Islamic finance traces its roots back to the 9th century in Baghdad. Actually, it was first evolved in Baghdad. Currently, you can equate with the system, sophisticated Avala system of informal money transfer. Like that, they used to do it in the earlier days, from the 9th century onwards. Actually, the core principle of Islamic finance is on the trust rather than the physical currency. Okay, and it relies heavily on the transparency and reliability. Trust is very important in Islamic finance because the fundamentals of Islamic banking is entirely on the trust. Trust is the fulcrum of the Islamic banking, you can say. The modern era of Islamic banking began in 1963 with the establishment of Midgamer Savings Bank in Egypt. Okay, this was the first bank. Earlier they were doing it in informal sector. Actually, it was not formulated in the banking way. In 1963, they established one financial services, Midgamer Savings Bank in Egypt, which was providing interest-free financial services. Okay, it was founded by Dr. Ahmad Al-Nijar. This demonstrated that what are the preachings of Islamic banking that can be practiced in the modern world. That's how it came into fore. Okay, now we will see what are the principles of Islamic banking. As we were telling about Islamic banking has the 4 fundamental principles. The first one is prohibition of riba. Riba in Arabic word means interest. Nothing more, nothing less. That means if you give 1 rupee, you have to take back only 1 rupee. If you pay 90 paise, then it's tantamount to riba. And if you give 1 rupee and 10 paise, it will be treated as a riba. Because in Islamic world, in Islamic finance, money doesn't have any value. Money doesn't have any intrinsic value. Whereas in the modern finance, money has intrinsic value, right? So prohibition of riba is the first principle of Islamic banking. All forms of interest, whether you take by calling it a charges or you are paying interest, any other charges, that should be in strictly upfront known to the customer. If you do anything other than that, it will be strictly forbidden. It is haram. Then you are promoting risk sharing and ethical practices. What happens here? It's quite interesting. In a modern world, we are talking about risk sharing and all. Okay, those principles were evolved in the Islamic days itself, because Islamic finance believes there is always a risk and reward. Okay, if you take risk, you will be rewarded more. That's how the Islamic banking products are designed. And we'll come to the second principle, ethical and responsible investing. What they mean to say is investments must align with the Sharia principles. Okay, let me complete this, then I'll explain what is the Sharia and how does it work. Okay, ethical and responsible investing means the investments must be aligned with the Sharia principles, avoiding industries like alcohol, gambling, and conventional arms manufacturing. Because as per Islam, alcohol and gambling is prohibited, because gambling is related to something like a maisir, it's a gambling, and alcohol is prohibited in Islam. So they say they should not invest in these kind of industries. Then we'll come to the profit and loss sharing. As I told you earlier, Islamic banking products encourages risk-based assets. That means risk is shared between the bank and the client, fostering a partnership approach to finance. I'll give you a small example to this. In today's insurance, what we do, we pay some premium to the insurance companies who collect similar premiums from other customers like us, and it will be kept in the fund, actually like a corpus fund. As and when anybody claims, insurance companies pays, right? The same approach is there, but here the underlying principle is slightly different. In the case of conventional insurance companies, the insurer bears any damages or any risk arises, comes into the fore and pays the whatever amount is required by it compensates basically. Here in the case of Islamic finance products, risk is shared among the investors. Whoever invests in the insurance in the form of premiums, they come together and they make good for others' loss. That's how it works. Okay. Then we'll see the fourth and the last principle, asset-backed transactions. They say financial transactions must be linked to tangible assets, reducing speculation and promoting real economic activity. This is very, very true in today's world, because what happens, you must have heard in 2008, many banks have incurred a huge loss and went bankrupt. For example, Lehman Brothers, which once upon a time we were boasting one of the top 5 banks in the world, it vanished in a day. Suddenly it vanished. In no point of time it vanished. The reason being, what happened? Lehman Brothers excessively relied on the futures and options actually, which may or may not happen. Okay, so that is why Islamic banking says, whatever you invest, there should be a tangible assets. You know what is meant by tangible assets, right? Tangible assets mean anything we can feel, touched. It's a real asset, and unlike forward and futures, the outcome may or may not be in favor of you. In Islamic finance, the advantage is here, even if there is a loss, it will not wipe out your entire corpus fund. At least you have some assets to back on. That's how it works. Okay. And we talked about Sharia. In Islamic banking, we said it's being run based on the principle of Sharia. So what is meant by Sharia? Sharia is nothing but it has evolved over a period of time based on the four factors. The first is the Quran. So any issue in Islamic banking products, the hierarchy will be like this. Any issue, any knowledge is required, or any feedback is required, we need to understand better. The first point of reference is always Holy Quran. Okay, whatever doubts they have, they want to know, they want to seek any knowledge, they want to know the answers, first they will refer the Quran. If Quran doesn't give the adequate knowledge or the answer which they are to the seekers, what will they do? They will look for Sunnah or Hadith. What is Hadith? Hadith is basically a prophet period. You must have done some things. Based on his talks and his teachings and the way he practiced, everything is compiled. Okay, those are called Hadith. That is the second point of reference. The third one is Ijma. It's basically a consensus. What happens here? If okay, first point in they refer the Quran, it's not, they couldn't figure it out how to derive the solution for this. And the second, they go for Sunnah Hadith. Hadith also they are not sure. Then what they do Ijma. Ijma is basically a consensus where the Islamic clerics actually they discuss and debate how to evolve solution for this, and they quote various schools of thought, and they come to a conclusion that how we can find a solution for this problem. Okay, that is the point number 3. The fourth one is chaos. This is basically analogy. This what happens, they take certain things from Quran, Hadith, then they'll try to bridge between these two interpretations so that they get the positive answers. Actually, they could able to find a solution for any financial products, Islamic financial products. Okay, the interpretation and application of these sources are crucial. See, we have a we have an international financial reporting systems like that. We have central banks like that. Each country, Islamic countries, some countries have Islamic advisory boards, like Islamic Financial Services Board in Malaysia, which oversees the, like we have in the Central Bank, Reserve Bank of India, which is doing the role of bank to banks. Like that, in Malaysia, there is a board called Islamic Financial Services Board, which oversees the Sharia regulations related to the Malaysian government, especially for Islamic banking products. And they have a qualified Islamic scholars. They play a vital role in ensuring that all products and operations of Islamic banks comply with these principles, maintaining integrity and trust within the system. So you must be wondering actually why this Islamic banking is evolved recently in a huge way, because you see the world population is around 815 crores last year as per the 2024 estimates, and out of which almost 200 crores represent Muslims. You can say almost 1/5 they form a majority actually. They're one of the largest regions after Christianity. So the growth rate is also quite interesting. They are growing, this Islamic banking products are growing at a rate of 9 to 10% every year. Okay. As of now, the Islamic banking products stand at almost USD through 3.6 trillion dollars, the total assets. And it's continued to grow. We expect by 2028 it will touch 5.5 trillion crores. Okay. So that is why actually the Islamic banking is gaining momentum actually. Am I clear? If you have any questions, can I continue in this phase or should I reduce my speed?
Yeah.
Is it okay?
Please continue.
It's fine.
Okay, thank you. Okay. There are many schools of thought, Islamic thoughts actually. As I told you, the Sharia and all. The Sharia is nothing but the compendium of all these scholars actually. They are the major scholars who lived in those periods actually after the period of Prophet Nabi. Okay. Based on their teachings and their compilation of various compendiums, there are different schools of thought have evolved. Okay. These are the main actually out of above. The Hanafi is the least conservative, I can say, because the Hanafi is found by Imam al-Numan ibn Tabit Abu Hanifa. And the second one is Hanabali, which is the most conservative. Shafi, Maliki and Jafri. I have given the names of the Imams on which name actually the schools of thought have evolved, who created this kind of thoughts actually. There are other schools that are there like Zaidis, Ismailis, Ahmadis. Numerous schools are there, but these are the main 5 schools based on which the Sharia has been evolved, or rather evolving. Okay. Hanafi, Hanabali, Shafi and Maliki belongs to Shafi Sunnah Muslims actually. You might be knowing it actually. In Islam, there are 2 sects of people. One is Sunni Muslims, other one is Shia Muslims. Hanafi, Hanabali, Shafi and Maliki, they follow Sunni Muslims. Okay, there are the teachings are slightly different. Of course, the main reference point for them is the same. Like as I said, Quran, Hadith, Ijma, analogy, whatever it is there, consensus and analogy, chaos. So these are the 5 schools on which the Islamic banking products are created. Okay. For example, Hanafi in India and Pakistan, I'm giving a few examples actually, how the products are interpreted in certain areas. For example, Hanafi in India, of course, India doesn't have a Islamic banking products because RBI is not given clearance for this. Okay. But whatever the Muslims in India, predominantly they follow Hanafi system. Okay. In Pakistan also they follow Hanafi system. Hanabali, predominantly it's practiced in Saudi Arabia. And Shafi, again it is. And one more thing, there is no need that if I have to follow only one principle of school of thought, nothing like that. It's a combination. You can use 2 schools of thought for a product also. There is no fast and hard rule that any bank or any system should follow only one principle actually, nothing like that. For example, suppose if I have when I come to the Islamic banking products, I will explain you how the schools of different schools of thought are practiced, in what way they differ actually. That I will explain you in the later slides. Okay. As I explained you, Islamic banking has emerged as a significant player in global finance, experiencing a rapid growth in the Middle East, Southeast Asia, and increasingly in Western countries. Its ethical framework and focus on real economy activity resonate with a diverse client base, driving its widespread adoption. With assets exceeding 3 trillion globally, Islamic finance continues to expand, driven by principles of financial inclusion and its adaptability to new technologies, including fintech and blockchain for Sharia compliant solutions. See, in fact, you might be wondering, Islamic banking products are practiced only in Muslim countries. Not like that actually. Even non-Muslim Islamic countries like America, USA and the UK also, they are also introducing Sharia compliant products, and they are also introducing Sharia compliant bonds like sukuks. Islamic bonds are called sukuks. So you can understand that the Islamic banking now, it from the tag Islam, it's only for Muslims. It's slowly moving towards non-Muslims also. Even they are also interested in investing in Islamic banking products for the simple reason because of its transparency and the real asset formation. Unlike conventional banking products, which they use for futures and options, and there is a risk that their capital can be wiped out. So in order to reduce the risk, what they do, they are encouraged by the Islamic banking products, and they are investing in the Sharia compliant products also. Okay, move on to the next slide. Let me explain what are the differences between the conventional and Islamic banking. In what way we are telling that Islamic banking products, how we address this Islamic banking products to the modern world, actually, how it has got relevance to the today's economic world. Any questions? Anybody? Okay, let us see what way it is differs from the conventional banking. Okay, say first example is risk allocation. In the Islamic banking, the risk is transferred to the borrower. Actually, in the interest-based conventional banking, the risk is shared to the borrower. In the case of Islamic banking, the risk is shared between the parties. For example, I give a simple example. Normally what happens, if there is any if you must have deposited some amount in the banks, right? You are depositing some amount with any banks, in nationalized banks or private banks. What happens, actually, there is, in case of there is a loss, your principal to the extent is saved. Whatever amount you have, that is, you can claim always. Okay, though there is a cap in that. If any loss occurs above 1 lakh, okay, as per Indian terms, do you have a deposit insurance guarantee corporation which can give guarantee up to 1 lakh only. Okay, if any banks become bankrupt in India, if you have savings of more than 3 lakhs, you will get only 1 lakh, because as per the Indian regulations, your protection is, your capital is protected to the 1 lakh only. Of course, you get at least 1 lakh. Whereas in the case of Islamic finance products, the risk is shared between the investors. For example, more the risk, more reward will be there. In the normal banking system, what happens? You get a fixed amount. Let's say you have a interest deposit of 8%, means you continue to get 8% only. Okay, though the inflation is more than that, your return will be assured only on that whatever agreed terms are there, 8% only. In the case of Islamic banking products, you get more. Actually, the more you risk shared with the banks, your potential to earn more is assured. Actually, similarly, if there is any loss occurs, you are bound to bear that loss also. So there is always a risk and reward is there in the Islamic banking. The second one is underlying assets. In the conventional banking, you need not create any asset, actually, right? If you go for any loan, they'll give for any purpose, like say personal loan, they'll give you, or consumer goods, they'll give you. It's not necessarily that you should buy that. In the case of Islamic banking, it is always the tangible assets. As I said earlier, what is meant by tangible? Tangible is a thing, any asset which can be touched and felt. That should be a real physical asset should be there. Okay, so it is backed by a real asset. The last point, ethical standards. So what is the goal of the conventional banking? They have targets. Their goal is to increase their profit margin. Every day they want to show the management, we have increased the profit. Last time our profit was this much. This time we have exceeded the target, and we have shown the growth rate of this much percentage. Okay, against this, Islamic banking functionality differs. Actually, what it says whether are we following the Sharia compliance. Our products are Sharia compliant, and we follow social welfare. See, basically, it's a blend of social and capital ideologies. That's what I feel. You are earning, at the same time you take care of the social. You have the social responsibility also. That's how it works. It's a blend of both social and corporate values. Okay, now we'll see, now that we have seen that origin of Islamic banking and how Islamic banking products were formed, we will see what are the Islamic banking products and how it is used in the today's world. Let's talk about Musharaka. Musharaka, it's basically an Arabic word. It's a joint venture, a partnership where all parties contribute capital and expertise, sharing profits and loss according to pre-agreed ratios. Okay, the beauty of Islamic banking is whatever outcome of the whatever may be the financial outcome, everything is specified upfront itself. If loss comes this way, loss, if in case of loss, this will be our loss sharing ratio. In case of profit, this will be our profit sharing ratio. In the case of conventional banking, what happens? You get a fixed amount, right? So even that fund or the company performs, the project performs well, you still get the same amount. You won't get more or less. Though you get your risk is mitigated to some extent. But the disadvantage is you are not gaining also. If the market improves and if the company is making good profits or the project is making good profit, you are not going to get it. That's a big disadvantage, I would say. To overcome this product, Musharaka, it clearly spells out what are the profit and sharing ratio of the amongst the investors. I told you about that Islamic banking, different schools of thought, right? See, I'll give you a different scenario, how the interpretation of different schools of law can be applied here. For example, in one scenario, the two promoters, they form a company, they form a partnership, and they get into some business. Okay, they do some activity, some paper mill activity, they are manufacturing some paper, something like that. What happens? One person has land. The total project outlay is say 2 crores. One person says, okay, I have a land which can be valued at nearly 1 crore. The other person says, I can bring money, I can bring capital. In the Anafi school of thought, what they say, in the case of profit sharing, it should be the same, like 50-50%. So the first person say, I have a land. The person who has land, he will offer, okay, my share will be my land. Okay, that will be my capital. The other person will bring in cash. Now what happens? This is complied as per Anafi school of thought. Whereas in the Anabali school of thought, the interpretation would be slightly it will be differing actually. They would say, no, every person should bring in cash. If I bring in, one person brings in cash, the other person should also bring in cash equivalent to that amount the earlier promoter has brought in. So here is the interpretation on certain business areas differ. Otherwise, the crux of the matter, crux of the Islamic banking is the 4 pillars. No riba, no gambling, real assets, profit sharing. That should be a risk and reward for the investors. Okay, this is a musharaka. This is mainly used for joint venture. If anybody like a loan syndication, if you equate with the modern banking products, you can say loan syndication deal. So different banks can come together. They can fund a big project. Let's say 10,000 crore project is forthcoming, and no banks would take that much risk. So what will they do? They form a syndication actually. Different banks will say according to their risk appetite, each bank will contribute their share of capital. So that's how it works. Similarly, the musharaka you can be equated with the syndication loan. Okay, then we'll see the mudaraba. Mudaraba is basically a trustee financing. I'll tell you what is the difference between, though it looks you may wondering both are similar in nature, in what way this is different from the one another. I'll explain. Mudaraba is actually, it also same, it does the same functionality, but the difference will be one person, Rabul Mal, the person who provides the capital, will be treated as is called as a Rabul Mal. Okay, is a principal. The other person, Mudarib, is an agent basically. And the other person will bring in his expertise. He may not be having a financial wherewithal to fund the project or form a trust. The other person will say, okay, I will lend my skills and expertise. You bring in your share of capital. So we will work together, and this will be our profit sharing ratio. And the beauty is here, profits are shared, but losses are borne by the capital provider, because the person, the mudarib, he acts as an agent actually. He doesn't bring in any money. He is only acting as an agent. So any loss arises in case of any eventualities, that will be borne by the Mudarib unless the losses occur on account of Mudarib's negligence. Every loss will be paid by the rebel mall. We'll move on to the next project. Okay, this is very famous and widely used product, Murabaha. Murabaha is basically a cost plus profit product. For example, in normal finance, let's say if you want a car loan or consumer loan, any banks, what happen, they give loan to us directly and we will book a amount. Okay, we will pay the amount to the dealer, distributor, and we will take out the vehicles in our name. In the case of Islamic banking products, what happens? Bank acquires the product actually. Bank acquires the vehicle in its name actually. First, it is like a deferred payment arrangement whereby the bank buy the product, transfers in its name, holds in its name, then it transfers the ownership to the person who pays the last installment, who pays the last amount. So let's say the value of the vehicle is 100,000 and they won't charge any interest. They will say profit actually. They will sell it and they will add some more profits. Let's say 10% or 20% margin. They will add on the vehicle. They will sell it to the client customers. Customer, what is the, whenever there is a due date, on due date, the customer has to make the payment to the bank. It looks like a normal bank, but the underlying principle here is it is not fixed on the interest. It's sold on the profit. It is basically a bank is not dealing in money. Bank is dealing in commodity, any property or asset. That's how it works. And this is the same thing they use it for personal finance also. I will explain as and when the product comes in the next slides. The next product we are going to see is Ijara. Ijara is nothing but a lease. There are two kinds of lease. One is a financial lease and the one is the operating lease. And as per the company's law, there are some definitions how the lease can be called termed as a financial lease or a operating lease. If the cost of the product, cost of the asset exceeds the 90% of the lease amount, or the 75% of the life of the asset is included, then it will be treated as financial lease. Of course, Islamic finance doesn't deal with this kind of doesn't do this kind of differentiation, whether it is operating lease or financial lease. The underlying principle is there should be an asset based on which the bank can lend money. This is similar to conventional leasing. The bank buys an asset and leases it to the client for a specified period, with ownership often transferred at the end of the term, used for equipment, vehicles and property. In India also, leasing is mainly used for equipment, vehicles and property. Most of the airlines, if you see in India or international arena, most of the airline companies, they don't own the airlines actually. They take lease. They take lease on long terms, long duration. Then they pay lease rentals. That's see here. If you notice here, the ownership is immediately transferred to the bank's name. Then finally, it transferred to the customer name. Is it clear? Please tell me if you feel I'm running a bit fast or somewhere you stuck, so that I can revisit that topic once again. No issues.
Sure.
Okay, shall we move on?
Yeah, we can move on.
Yes, Balaji.
The other product is Istisna. This is mainly used for housing projects. Let's say if you are constructing a big multi-storied buildings or shopping mall, like modern day finance, they have equivalent financial product which can be called Istisna, mainly used for manufacturing and construction activity. This is a contract whereby the manufacturer, for construction of any asset, he approaches the bank and the bank pays the manufacturer in installments. It by like we pay, we take housing loan. What happens? Our housing loan provider says, first I will pay only 15% still the foundation level. Then when it reaches the plinth level, I will leave certain portion of amount. Similar to that actually, in Istisna also, it is basically a event based financing. Up to this level, the bank will pay certain amount, some portion of amount. After that, they will release the amount. It is basically a progressive finance. Based on the progress of the project or construction activity, bank pays the amount. Okay. This is mainly used for large scale infrastructure and industrial complex and projects actually. Some industries may be constructing a big industrial setup actually, where it is kick-started from the leveling of the area, and building and laying the tarmac roads, constructing laying foundation, constructing industrial sheds. So those can be equated with istisna financing. Okay. Now we'll see, those are the basic Islamic banking products. In addition to that, there are some other Islamic banking products. I forgot to include that actually. Maybe I can tell you now. There is a product called Salam, 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 which is mainly used in agricultural finance. It can be used for agricultural finance to the farmers. Farmers, they can obtain this loan at a pre-conceived, pre-determined profit rate. Let's say bank can provide 100,000 rupees, and they will say after the crop season I will take from you 1,10,000 rupees, and there is a defined period is there, and Salam doesn't underlie any collateral, nothing, because it is basically it is an advance payment. Okay, it is an advance payment whereby the bank knows very well that this is the activity, activity or for purchase of cereals or grains, I am going to give the money to the farmers. It's called Salam. There are other products also there. For example, there is a product called Kardal Hasan. In Islamic finance, actually, as I told you, anything in excess or less will involve riba, okay, which is a haram, which is a prohibited. So suppose I'm a customer, I want some personal loan to meet some medical expenses. How to meet this medical expenses? Because Islamic finance, it says it should be backed by any financial assets. Okay, then how will I am in need of money, I want to take care of my family. So how to overcome this situation? There is a product called Kardal Hasan. What happens actually, as per this Kardal Hasan, banks provide interest free, that means profit free loan to the customers. They won't charge any interest, they won't charge any profit. Okay, what they do instead, of course banks are there to earn money, so what will they do? They will take some charges as like documentation charges. What are the real expenses which may be really incurred by the bank? For example, banks, in order to get into the contract, banks must have spent agreement or administrative expenses. Those expenses they will cover actually. They won't take anything more than that. That is, it's basically it's a benevolent loan given to the needy customers who are desperate in need of money. Okay, that is called Kardal Hasan. And one more thing, I will briefly touch upon the refinance part of Islamic banking. Now we spoke about the different products, istisna, murabaha, musharaka, everything. But suppose as a bank, I don't have that much money. What, I'm a small bank, but there is a project which says if you invest this much amount, your profit will be this much. So what bank can do is they can avail refinance from other banks. In the normal banking system, that feature is available. Any bank can get loan from any bank. Okay, it's like you have a money market, and you have a call money market, whereby the banks take loan from other banks. Like from 1 day to 1 year, they can avail loan. Similarly, in Islamic parlance, there is a product called parallel istisna. Suppose the bank, let's say I'm X bank, I make the payment to the one commercial complex project. So what can I do is I can get into another bank, I can get into another parallel istisna contract. So suppose my profit ratio here is 15% here, my parallel salam contract will be 5% or 10%. I will cover my profit portion. Is it clear? It is. I'm trying to give an example of how refinance can be used in Islamic finance. Suppose the bank doesn't have money, because as per the central bank regulations, banks are required to keep certain percentage of capital as a risk-free capital as per the Basel norms and central bank regulations. So banks, what they do, they can adopt this method whereby they can adhere to central bank regulations. At the same time, they won't miss the opportunity of gaining more profits. That is called parallel salam or parallel istisna or parallel ijara, whichever is there. So if they found any other financiers, like let's say State Bank of some X bank is there, they can take a refinance from State Bank of India and they can get into the project. Now we'll move on to the contemporary developments and products of Islamic banking. Tawarruk and hybrid contracts. See what happens, as I explained earlier, call money and overnight markets are there for banks to invest. Whatever idle funds are there, each bank has a treasury department whose role is to ensure that nothing is missed out. They want even a single penny to be earned. So what they do, whatever excess money they have, they will invest in the call money market. It's called interbank offered rate. In India, you have a MIBOR, Mumbai interbank offered rate, and in you have UK LIBOR, and you have New York NIBOR. So what happens? Whatever excess funds bank have, they will deploy it in the money market, and they will interest out of it. So that means their money is always earning. Whatever capital they have, banks excess money will be earning interest on that. So they will mainly invest in call and money markets. Similarly, Tawarruk is a product. It basically is dealing with commodity murabaha. As I told you, murabaha is nothing but a cost plus profit margin. Okay, one product will be there. On that, I had some portion of profit and I will sell it to the customer. Instead of interest, I will be selling with my cost plus profit. That's how the murabaha is being worked out. And in the case of liquidity management, in this Tawarruk is a very good tool. You know what is mean by liquidity? I'll just briefly touch upon what is mean by liquidity management. See, each bank has a certain liability management committee. Their role is to ensure that bank has adequate assets and liabilities to manage, because if there is a mismatch between the asset and liability, bank will go bankrupt. As I gave example of Lehman Brothers and Barclays Bank and many other banks, there could be banks could collapse, bearing banks, everything got collapsed because of asset liability mismatch. So that is a paramount function of any bank to take care of the asset and liability match. That should be always a perfect asset and liability match should be there. If there is liabilities more and they are not able to pay the amount to the customers, bank will lose its credit worthiness and it will become bankrupt. So it is a commodity muraba is used in liquidity management. Here actually banks will buy commodities from any exchange. Let's say for example, I'll give in Malaysia, Bursa Suk Al Sila. There is a Malaysian market and there is a commodity market in Indonesia. What they do, they buy commodity like copper, silver, aluminium, they buy. They sell it to the other party on the cost plus profit margin. The other party and immediately will sell. It's like a deferred payment. Immediately sell back to the bank. That money will be used for the liquidity management. And at a due date, that other person will make the payment on the maturity date. Whatever the date is agreed upon, on that particular date, the other person will pay the money. This is used for like a call and money market. As I explained you, it can be from a day or to a year. It can be used to finance that particular period. Then there is another thing is called Islamic microfinance. What is a microfinance? We are talking about finance. What is a microfinance? Microfinance is nothing but it's like a financial inclusion. See, there are lower stratum of society is there. People are there. We are who are living below the poverty level. The main idea of any government, any central bank is to bank the unbanked areas. These are the people who are not, they don't know what is meant by banking. They are not included in the banking system at all. So Islamic microfinance provides an alternative to the people who are living below the poverty line. It is like a group of activity. Instead of giving a single person, they will do like let's say in one area they have a women entrepreneurs, they have a 30% are there. What will they do? They form a group and they will incubate their ideas and they will give money to them. Actually, it is like a social responsibility. In microfinance, what happens if one person doesn't pay, the other person will compel them to pay. It's a kind of it's a group. Basically, it's a group funding. That is called microfinance. Islamic finance also provides small scale Sharia compliant financing to small entrepreneurs, like say small, medium, and micro entrepreneurs are there who are actually not availed any banking products or advantages with any banks. They don't know. They are maybe ignorant actually. So the aim of the Islamic microfinance is to uplift their life by way of giving loans in a Sharia compliant manner, so that they also earn and their financial status improve over a period of time. Then investment funds. Here, as I told you, the Sharia always lays importance on real assets. So whatever investment they do, all backed by real assets. They invest in equity, real estate, and commodity funds. Here, even though it is a commodity, it will be comprised of real commodities, not like futures or options. Even if they follow futures and options are there, that should be in a predetermined, pre-fixed rates. And sukuk. Sukuk is an Islamic bond. Basically, sukuk is you can call equate with any bond, conventional bond. Like say any banks, any corporates in India, they can issue some bank bonds, and the public will be investing the money on that. Actually, it will be backed by sovereignty. Central bank will have the backup of the central bank. So generally, what happens if any government, even in India, Tamil Nadu government or electricity board issues any bonds, we'll be happily investing out, because we know the amount we invest will surely get that amount, because it has the backup of the sovereign government. So similar to that, these are the Islamic bonds which has backup of the securities. Let's say 100 crores sukuk bonds were raised. That 100 crores will be already, let's say if the sukuk bonds already have the properties equivalent to that amount actually. This is like a availing bonds against the fixed assets. In conventional banking, one can raise amount for any purpose, but in Islamic banking, you should not avail any. You should not borrow or money from the investors unless you have the physical assets. That is the main advantage of these sukuk bonds. Now we'll see what are the software solutions provided by the lead software banking software companies. See, realizing the importance of Islamic banking and Sharia compliant products, many companies are into banking systems, Islamic banking systems, and the leading players like Temenos, who is a global leader. Extensive Sharia compliant products are there. And you have Oracle Financial Services. They have the financial system which cater to the needs of Islamic banking customers. Then you have ICS banks and Newgen. And the key features of these softwares are they are Sharia compliant. They have a internal Sharia expert. They weigh the product, and also they design a product in such a way that it evolves over a period of time. The fundamental of the product is never shaken by the any change in the futuristic product inclusion. So that is there actually. The Sharia compliant is there. Then we have a modern technology like AI powered decisions, and whatever the blockchain innovation that are going to come in the future. So keeping in mind all the advanced technologies that are going to come in the near future, all the nitty-gritties were included in the system, banking software system. And each software has some specialization. Some may be experts in the treasury markets, and some may be in the, like say Temenos. As far as my knowledge is concerned, I know Temenos is expert in the commodity Morabaha, Tawaruk actually. Similarly, the other companies, they have expertise in loans actually, Musharaka, Mudaraba, and many products actually. It is basically a cluster approach. It is not evolved in a single day. Over a period of time, based on their interactions with the customers and their Sharia principles, these products were evolved. So how would be the future trends of the Islamic finance? As I explained you, they are also Islamic banks also embracing blockchain. They are also ready to support AI, cloud computing, for enhanced efficiency, security, and accessibility of Islamic financial products. And the regulatory evaluation part is also there. We have a corporate social responsibility in India. Like that, they also have the Sharia board, which oversees the social responsiveness. They act what are the factors that can contribute to the social improvement. So their aim is not only basically in a single word, I can say that Islamic banking is not just earning money or earning profit. Its main responsibility is its transparency and its promoting socio-economic activities. Thank you all.